Oh, we are live. We are live. Welcome everybody. Welcome to Carolina Retirement Planners weekly happy half hour. A little broadcast here on Facebook Live, available in recorded, but being in there in per perpetuity on YouTube. I am David Shakavage. I am the president and founder of Carolina Retirement Planners. We're here in Wilmington, North Carolina. And joining me today is Kristen. And Kristen say hi, Kristen. And
Hi guys. I'm the director of First Impressions here.
she's the director of First Impressions. She's joining me today. And there's and behind the scenes we have the ever present but and notorious Amy. Amy, say hi to everyone.
Hello. I totally threw you for like a curveball, I could tell, because we went live and I really didn't give you any warning. I'm just like, ta-da! So sorry about that.
Oh, that's okay.
They're like, hey,
okay.
Here we are. We're live. Yeah, we're live. Hi, everyone.
Hey, we are we've been doing this now for I think 66 weeks. We started it long ago because with COVID we couldn't have luncheons and other things we did for our clients, and we still want to keep our community, give them something. So we come every Thursday for 30 minutes or so, and we have some fun and we talk about some hopefully something interesting. As usual, those who have come before know, say hi to us in the chat. We don't know you're here unless you say hi in the chat. And
my mom was the first one here today. Can I just say that?
I can see.
I'm going to go on camera and be like, she is never on time. Way to go, Mom. I'm impressed. I mean, it's shocking.
And I want to bring on, I want to introduce a new member of our team. He's sitting right behind me here. Come on. And this is Jameson Askew. Jameson joined us just this week, and he's going to be helping us with all the good things to make this system work and help you. So you may have a chance to talk to him later. I'm not going to embarrass him by asking a lot of questions about him yet. We'll bring that on in a future time when he's had at least a week under his belt and knows the ropes on what's going on here. But he is a graduate, I believe, of UNCW, if I am correct. So he has been duly educated locally and a North Carolina boy. So thank you, Jameson. Well, everyone can type in a little hi and welcome Jameson.
Hi, Jameson. Welcome.
Hello.
And I see that Randy and Brad have joined us. What is everybody drinking?
Oh, I'm not fancy today. I have some mint tea. That's my thing.
How about you, Kristen? What are you drinking?
Today?
Yeah, and I'm drinking my usual herbal tea. You know, the times I've tried to drink something stronger, it doesn't always work out well, especially when I got a fairly complicated one like perhaps we do today. And we also like to talk about what day it is. And there's a bountiful number of days today or topics today. Amy, what is today?
Okay, well, today, my favorite one that I picked, and I didn't get a chance to reply to everybody's email, but so many came in with wonderful replies to unconditional love. And today is all about love, and it's Love People Day. But it's
unconditional love doesn't get better than that.
No, but it's also Ask Stupid Question Day. So
it's really unconditional love and Ask Stupid Question Day.
Yeah.
I wonder if there's any relationship,
Totally, because you can ask a stupid question and you just have to love people anyway today, even if it doesn't make sense.
Yeah, I think I've asked a lot of stupid questions and my wife still loves me, I think. So,
it's a good thing. I'm all about it.
Good thing, Kristen, who else do we have joining us? Who else has joined us?
We have Nadine and Mary is here today.
Mary is here. I
Mary comes
see,
almost every week. I love Mary.
yeah, and I see Lynn. Lynn has joined us, and
Oh, there's
Miranda
Bob.
has joined us, and Bob has joined us. He says the way the stock market's behaving, we need happy half hours. Yeah, that's kind of true. That's kind of true.
And hi,
Uh,
Ed.
we're actually going to talk about some things today that are sort of a way to fix that, sort of a system to fix that. And before I get to my topic today, and I'm going to, before we get into the details, I want to ask a question. It's related to the topic, but let me go to my iPad. If the gods smile on me here, there we go. And I have a question for folks. This is sort of this is a little iPad, and this is time, and we are sitting right here in about 2021. And if you go out and look at how many stocks you could buy, the number of stocks that are publicly traded on the stock market, right now there are about 3,500. Now here's my question for you. If we were to go back here to 1998, the year 1998, about, I guess, what, 23 years ago, and ask how many stocks were traded publicly on the market, how many would it be? And if you know, or you would just like to guess or estimate or whatever, just type into the chat what that number is, and I'm going to come back to that. Amy, kind of write them down, and when we get back here in a moment, we'll talk about that. But
You got it.
I want to go back, and what is our topic today, Amy?
Our topic today is a good one: high net worth portfolios and how millionaires invest.
High net worth and how millionaires invest. And you know, to the people I'm talking about are people called, the official term is accredited, if I spell this right, investors. And you could be, or you are, an accredited investor if you have over $1 million in assets. And those are investable assets: stocks, bonds, IRAs, 401ks, CDs, whatever. Doesn't really include real estate, but if you've got about $1 million, and I won't go into all the rules, but you got about $1 million, you're an accredited investor. And I know that probably many of you watching today are in fact accredited investors. You would qualify for that category. And you know, when you're an accredited investor, you have the opportunity to invest in some things that people that aren't accredited investors can't invest in. We're going to talk about what they are, and there's some reasons they're a little risky. They have other limitations, but you have the opportunity to do that, and I'm going to go show you what that looks like today, and the kind of things it's called. But Amy, back to this. Do we have any estimates as to how many public stocks there were in 1998?
We do. All right, here we go. Lynn says 940. Rocky said
940, okay.
Rocky says 6,500.
So
Rick,
we have
Rick guessed 1,000. Brad,
1,000,
Brad guessed 1,323.
1,323,
Caroline 4,000.
4,000,
Ed 3,500.
3,500. Oops, get back here. 3,500.
Cindy guessed 2,200.
2,200.
Patrick 7,600.
7,600.
Kay 2,500 and Patricia is 7,500. Oh, and then Robert said maybe 8,000.
8,000. Well,
Wow.
actually, this is kind of interesting because we have, you know, Robert, we have about 3 people that I'd say kind of got it right. Most, you know, more than half assumed it was the same or kind of less. The actual number is back in 1998, there were 7,567 stocks.
Ooh, okay.
Was way off my guess.
It was, in fact, if you think about it, the stock market over that time we have less than half the stocks we did 23 years ago.
I would have guessed the
number-
opposite. That's
You
crazy.
would think so. You would
Yeah,
think there
totally.
would be more stocks, and most people did. Most people thought there would be more stocks, but in reality, the stock market has been shrinking. Companies have been combining, going together. Some went out of business. A lot of companies have gone private, gone back out of the public market to get away from some of the the regulatory hassles that involve and the restrictions and the pressures to perform on stock price and all of the things. But over the last 20 plus years, we've seen an ever and ever shrinking number of stocks. Kind of interesting there, you know? Not something
Very interesting.
is known necessarily. Now, there are 3,500 or so stocks. Now, how do most people buy stocks? I mean, or how are most of the stocks probably owned in this country? Do people own individual stocks or do they buy them in some other form? What do you want to guess, Amy?
I would guess maybe it's a combination of both. I mean, I think if I'm guessing and I'm looking at what I do or my family does, it's you buy some individual stocks, but then some people get sucked into the world of, I guess, like mutual funds.
Most
right?
people buy them in the form of mutual funds or exchange traded funds. You know, your 401k, most people don't have individual stocks in the 401k, they got mutual funds. Most people, and what's interesting is there are 8,000 mutual funds, and they're kind of all fighting over, deciding over less than half that number of stocks. You know, just something to me, you can kind of see there's something odd there that you got 8,000 mutual funds just buying some combination of 3,500 stocks. And the other interesting thing is the top 140 mutual funds, they equal 50% of the market. So of this 3,500, just the top smidgen, it comprises half of it. It just shows you that the stock market is kind of becoming a less diverse place to play, if you will. And
That is interesting.
The world
now,
is smaller.
let's take a look here at another look at the world. These are public companies, and we know there's about 3,500 of them right here. Over here, we have private companies, and there are about 5,700,000 of them.
Wow.
So, you know, when you sit back and think about it, you know, there's so much opportunity here in this public equity. You know, there's 3,500 companies, but you think if you've got 5,700,000 options out here, this private equity world might have a lot of good opportunities in it, right? So a lot of those private companies that are owned by individuals or maybe smaller groups or partnerships or things like that, a lot of opportunity there. A lot of them too are smaller and innovative and willing to grow. here's kind of the problem is if, you know, when you have a public company, you can buy the stock and although you own the company, you're kind of you might say you're you're an investor, but you can't really influence the company. You don't, you know, yeah, you can vote your share, you know, at the annual meeting or something, and I don't know how many people do that, but it isn't like you're kind of a silent partner. So how do you, if you want to access this private equity, what do you do? And what you do is you actually get one of these and you buy it. So what these private equity companies do is they go out and they buy a company. Sometimes it's one group buying a company, maybe it's a group of groups, but maybe they buy part of the company, but they get control of the company. And so they got this company that they're now in control of, and their goal is to improve it. They want to make this company better. And they're looking for, in this pool of 5,700,000 companies, they're looking for an opportunity where, you know, there's a company that could be, has some low-hanging fruit for improvements. Because, you know, there's a lot of companies that have potential that aren't managed very well. And I wouldn't be surprised if many of you listening today at one point in time worked for one of those companies. You knew what was, you know, and so these companies go and they kind of do a turnaround. You know, it's a little different than the corporate raiders we saw back like maybe the 80s and 90s, where somebody would go in and buy a big company and then break it apart and sell it in little pieces. This is someone's trying to buy a company and improve it. And there's many things they could go ahead and improve. You know, they could improve the way the place was run. Maybe it needed better equipment. Maybe it needed a new computer system. Maybe it needed new products. It hadn't upgraded its products for a while. Maybe it just needed to distribute it better, have better trucking systems, better ordering systems. Maybe they needed to market it. A lot of things that these companies that go in, what it's really called again is private equity. These companies go in, identify a company they can improve, and then they bring together a team of experts that have experience at doing this, and they send them in to turn that around. You know,
Brenda, our Brenda said the Pretty Woman movie did this.
Pretty Woman movie did that. Yeah, this
Yeah.
is an early version. Now I'll tell you, the engineer in me, as many of you know, likes data. So I said, you know, I'd like to go see and Google around and find some of these examples of where we turned around a company, where companies were turned around. And here are some that if you go to the web and you look, you can divine certain things. I want to stress that our discussion today is for educational and entertainment purposes. It's not meant for you to go out and search for private equity or any kind of take this as an investment advice. It's, you know, so I'm not even going to talk a lot about a lot of names. I don't want to get into a lot of to spend 10 minutes on disclosures, but it's just sort of for education. But I am going to show you how many of you may be able to access some of this yourself and tell you how. But one example is a company called CommScope. And CommScope is a North Carolina company. They're based in Hickory, North Carolina. In 2011, a private equity company basically invested $1.6 billion. And from what I can gather, it was public and they took it private. They actually took it out of the public domain. When they did that, there must have been other owners because it was worth 4 billion. So if you take 1.6 divided by 4, it's about 40%. They owned about 40% of this company. And 2 years later, they sold it for 11 billion. You know, so 40% of
Wow.
11 billion was probably what, 4.4 billion that they made for an investment of 1.6. So that was a pretty good deal. You know, I'm sure they
That's
had
a very good deal.
additional money, but this is the kind of thing where they turned it around. It's hard going through a lot of them have case studies that they talk about it, and there's some news reports you can get, but very few talk about the bottom line. But I did find a presentation online. I found a lot of information, but buried in it was a PowerPoint presentation apparently given at a UBS conference years ago. Probably shouldn't have been put online, but somehow it was there. And this was for a company called Montclair. Montclair is actually a company in Europe, and it's a fancy luxury goods company, a real fancy down jackets and stuff like that. And a company, a private equity company took them over in 2008, and they finished selling them in 2030. If you go through the whole thing, there was multiple game playing and pieces were sold. But this presentation did show what two numbers that were interesting. They said that the final, they achieved MOIC, which stands for multiple of invested capital, something you don't see very much in the stock market sector, but it is a measure in the private equity sector. Basically, they made 5.7 times more money than they invested when they sold this thing. And if you want to look at it, a rate of return, they quoted 57% internal rate of return. Again, I got this off a good looking presentation. I'm not trying to say this has been audited or anything, but it just gives you an idea of one of these. This one though is pretty public. Anybody have a set of headphones or earphones by Beats?
I bought those for my daughter for
buy
Christmas.
Beats?
I bought them for my daughter last
You
Christmas.
bought it for your daughter. You go into an Apple store now, they're selling these Beats headphones.
Hey, I don't know if this is important or if you want to hide it, but your sidebar is showing, it's not upcoming slides, but it's past slides. So on your presentation, it's not a big deal.
Oh, this. Oh,
Oh yeah, yeah, just letting you know.
Yeah, I got to figure out how to get rid of it.
It's okay. I just wanted to make you aware.
Yeah, okay. I think we'll just let it. Darn, you think I would know how to get rid of this, but we'll just.
Well, it makes for a nice review.
Yeah, okay, we'll just leave it there.
Yeah,
So,
it's a good review because we're still not seeing the upcoming, so no spoilers.
So we're good. Oh, they're all on. Everybody's on edge. I know so. This is one that's even more. This one's very public. This was a Wall Street Journal article from back in 2014. One group of these private equity people bought Beats for $500 million, or they invested $500 million. They got 50% of the company. It was like within a couple years they sold it to Apple and for $3 billion, and so they netted $1.5 billion, or their 500 million was turned into, they made an extra $1 billion in a couple of years on this investment.
That's nice.
And you could go on. Dunkin' Donuts, Dunkin' Brands was one of them. There's a whole bunch of them. I just went through to find those. There's a couple other ways that you can invest besides just private equity. One is called private credit. Normally if you want to you do want to get interest, you either buy CDs or you buy bonds producing interest or you buy dividend producing stocks. The trouble is a lot of them go up and down with the market. There's people that go out and invest in different other income sources. And one of them is music royalties. You know, you read all the time where so-and-so has sold their book of songs to an investor and all the royalties will go to them. They make millions or billions, you know, when they do that. But here's an example. I actually dug down a couple layers, and one of these private credit companies owns a company, and one of their people are Guild GPS Music, and they own 6 Beatles songs, including From Me to You, I Saw Her Standing There, I Want to Be Your Man, and She Loves You. And so every time somebody plays She Loves You, a little bit of money goes to this group and goes into this private credit group. And guess what? How many times someone listens to She Loves You is probably not related to the market at all. And if you look at the correlation of their returns to the market, it has nothing to do. They do other things. They buy life insurance policies. They fund apartment buildings for short-term loans while they're building it and secured by. So there's a whole world here. There's also one that buys companies that are getting close to their initial public offering. They're getting going to be sold soon. And so by buying them since you get sold soon, you can make a lot of money because if it's done right, you get a big boost. I looked at a whole list of them. The one I recognized the most was 23andMe. You might have heard that in the news. That's where you do the saliva test and find your genes and whether you're, you know, are you American Indian? Or are you, you know, what's your makeup, and find long lost relatives you didn't know about, that whole sort of thing. So there's some other ones. Now, this is all great, but there are some downsides, right? Nothing is free. One of the downsides is, I'll do downsides, is liquidity. You know, if you give money to one of these companies and they're going to buy a company and turn it around, it could be years before the money comes out. So you don't necessarily have the liquidity here you do if you buy Apple. You can buy and sell Apple anytime you want. There's also the value. If I buy Apple, well, almost every minute of the day, somebody's buying or selling Apple. So we can look up what Apple's worth. If someone has a portfolio of these companies, what are they worth? How do you determine that? They do certain estimates quarterly or monthly, and they're audited now and then. But the real value, you got to watch who you're dealing with, because the real value is their estimate. Also risk, you know, they're turning around a company. If it doesn't work or the company goes broke or stuff like that, there can be a lot of risk. And also is the amount you have to invest. Now, typically, if you want to invest in this, you've got to put in, you often have to come in with $1 million. So, you know, you got to be more, not only an accredited investor, you got to be an accredited investor with lots of millions behind it. They just don't want to deal with little people. There is something that, and one of the reasons I've become familiar with this is because, as many of you know, we work with a group called AE Wealth, and they are a registered investment advisor. And out here are these, oops, okay, get back here. Out here are these private equity companies, private investment, anyway, private equity companies. And what we have found is a middleman that says, look, if we go out and we get lots of investors in smaller amounts and bring you this money in mass, and we'll do all the paperwork and all the work, we can get access to many of these, and often get access for amounts like $50,000, not $1 million. And now you're probably not going to make as much because you got a middleman in there, but it's still pretty good. And it's not correlated to the stock market as much because these private companies, you know, we're not sailing up and down. We're looking at a single entity that grows. So they're able to get a reasonable return, but kind of get away from the market cycles and the market risk. And they still have some restrictions, but they're much more, there is you know, they're generally liquid. You can get money out once a quarter, and there may be a limit to how much you can get out every quarter. So there are some restrictions, but because we're dealing with this middle system, it looks pretty good. So, you know, we're talking about it more with our clients as we come up with reviews. We started this about a year ago or less than a year, and I've spent some time doing my own due diligence and understanding how to apply it. But so we're bringing it up with our clients. If you are on here and are not a client, or if you're a client, you want to look more, give us a call. You know how to get a hold of us. We'll get on and look at it with more detail. If you are not a client, if you're here as a visitor or you've been coming and you want to know more, you can get in touch with us. Amy, you'll type this in, I'm sure.
I did. I put it up there, but I do have a question for you. When you're talking about some of these and you know the middleman, didn't we have somebody as a guest on with us? Is that similar to that Daniel Wildermill? Is that Wildermill? Is that correct?
Thank you for remembering. You know, if you're on here and you have less than another place to learn more is to go on August 12th. We interviewed a guy named Daniel Wildermuth. He runs a group like this, although his group is a little more designed to mimic what big universities do for their endowments. They've done a really good job of making good returns with less risk, and he has duplicated that. And on August 12th, you can go back and listen to him and I, and we did a call there together. And the good thing about Daniels is you don't have to have $1 million. You can invest in that for less if you are not an accredited investor. It's not quite the same as this, but it's really close. But if you'd like to know, Carolina15.com, you can go there and book a 15-minute phone call with us. You can do it the old-fashioned way and just call 815-3100, or you can go to our website, carolinaretirementplanners.com, and just send us an email there. And while you're there, check under events, because 65 of these are now recorded, including Daniel's. So that's, I think we're pushing the top of the hour. I hope this was helpful. I hope this kind of taught you a little bit about what this private equity, how high net worth people invest. Another reason why, wealth helps grow more wealth, because you got options. You got 5.7 million versus 3,500 opportunities. And if you have, one reason because it's less liquid and because it's more risky and such, they only want people that can afford to lose money and afford to wait longer to take advantage of this. That's one reason it's there, because of the downsides. But
yeah, David, you wrote our phone number wrong. I typed it. Brenda corrected you. I typed it right, but
Right.
Yeah, I am. I have it right in our comments, but
Yeah, give us the
it's kind of funny.
Okay, well, let's go back and finish up. Here comes the best part of the whole time. And Kristen is going to do our wine drawing today.
This is my favorite piece. The only downside to this is I don't get to win, even though I really like some. Okay.
I don't understand why I haven't won either. I'm here every week.
You can get into our drawing by basically replying to our emails, saying you want to be in the drawing. If you tell us you've invited friends to it, we'll put in an extra one for each friend you invite. Those who've been around know just, if you just kind of say, hey, I'm here, I want to go in the drawing, and get it to us ahead of time, we'll put your name on one or more of those little slips of paper. Okay, the winner is.
And the winner is
Drum roll.
Jeannie S.
Oh, congratulations.
What that means, 2 bottles of wine.
Oh, I thought that meant something extra, extra. I was like, what?
No. Well, they get 2 bottles of wine, and Amy will call you and find out what's good. What's our, do we have a topic picked out for next week?
We do, but you're putting me on the hot seat. And I've already sent it in. And it's a really, 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 really good one. Oh my, where am I? Oh my goodness. Now I have too much happening. And I've sent it and I've uploaded it and I'm waiting for it to come back. This is what happens when I'm not prepared. Oh, wait. Yes, I do. Are you ready? It's the
Yeah,
battle.
I'm ready.
It's the battle of the crystal balls.
That's right. I
Yeah.
get one thing people ask us a
Prep me
lot
for
is,
these things.
what's the market gonna do? What's the future look like? What's gonna happen to markets? And there are a lot of people out there, big names in investing, who prognosticate, is that the right term? Who predict what's going on. And we're gonna have some fun. We're gonna sit here next week and we're gonna look at some of and compare
gonna be
the
a good one.
recent predictions on what the market's gonna do. And it's a lot of fun because to see the differences. So
I like it.
if you're wondering what the future of the market looks like, we're going to do our crystal ball show next week and compare some of them. It'll be fun.
I am so excited about this one. I really am.
Going to be good. We've not done one of those before. This is going to be a first. So should be good. Should be good. Well, I think that's about it. Everybody, be sure to tell your friends if this is available on YouTube. Easiest way is go to Carolina Retirement Planners and click on events, and all 65 are there. Always have rogo.com, rogo.com has some of my classes there in nice little bite-sized chunks. And if you'd like to know more about this, get in touch with us. And till then, we'll see you next week for Happy Half Hour. Cheers.
I'll say cheers. Is Jameson over there? Is he peeking? Can you
Yeah,
peek and
he's
say,
here. Say hi, James.
Say hi. Say hi. Cheers. Say bye.
Bye-bye.
I'm putting him on the spot now too. Bye, everyone.
Okay.
Have a great weekend.
You too, everybody.
Bye.